Ninth Annual Edition of India FinTech Forum's IFTA 2024.
When you talk about blockchain use case, is a foundational technology. It's not like something like mobile app or API, and that is how we look at foundational use cases like trade finance or centralized KYC or reporting of fraud. So these are those problem statements which are not being solved with the current internet. So that is how blockchain comes and helps banking ecosystem to solve some of those path-breaking use cases, business workflows. Say example, opening account. It takes 5,000 to 10,000 rupees for one account, and imagine more or less we have more than 2 accounts, and that's how we look at once you open a bank account at one bank, same process followed at the next bank. So imagine once you create a account opening on blockchain, the same KYC can be reutilized with the proper rights and permissions. Now go back and identify multiple use cases similar way, like reporting of a fraud from one bank to another bank via RBI. It takes 45 days. With a blockchain, it can become a real time. And the latest use case which more than 34 countries are adopting, which is on a CBDC, that is a central bank digital currency, and it's on blockchain. While so far whatever payment ecosystem, financial ecosystems we have built, they are full of lot of reconciliation, settlement, disputes. But with a flawless implementation, with a better customer experience, I think CBDC is one of those path-breaking use case. Why? Because apart from tech, it is being adopted at multiple levels at multiple countries. When you talk about stable coins, it is not something like a digital currency or a cryptocurrency. Stable coin is a infrastructure which can be utilized for doing a value transfer from one location to another location. In my view, it is one of the fascinating and top adopted use case of a cryptocurrency. The way I look at USDT or USDC are stable coins in US, and the majority market covered almost more than 90%. We can use the same ecosystem the way majority of countries are working on a CBDC with a stable coin coming into picture. And imagine if you compare the same transaction flow with the SWIFT or any other cross-border, which has lot of operations involved, it's time consuming and a lot of paperwork are involved. Imagine stable coin where you are sending one value or a currency from one country to another country where recipient, it can happen on the spot. So I think in longer term, with blockchain's features and functionality by which stable coins are being built, many countries will adopt. Example, US has started, and rather they have announced the Genius Act, or so-called Hong Kong or many other countries are following that railroads. So looking at the overall adoption, while majority countries are working on CBDC, the same countries like China or multiple banks are now exploring stablecoin opportunity. But bottom line, while stablecoin is there, it has to be well supported by right regulation, right policies, so that we need to know the complete customer journey and the source of funds. I think with all the technical features or functionalities or benefits, with the right regulatory guidelines, I think stablecoin has a long way to go. I think when you talk about critical banking applications, banks are sitting in glass houses. What I mean to say that people and any of those corporates who are doing banking, they always relies on the banking institutions as a trust factors. So when you talk about private versus public blockchains, so typically in a public blockchain, anybody can be part of that ecosystems. And so-called private blockchains, it is a consortium of like-minded institutions. And when you talk about banking use cases on blockchain, definitely we will always go ahead with the private blockchains. And when you compare these private blockchains with traditional databases, imagine centralized database goes off. So we have a different mechanisms which do banks to follow, which has operational gaps. But with the private blockchain kind of use cases, we can give out much more better experience on better operational life cycles, or when you look at onboarding of those banks on private blockchain with a use case like trade finance or fraud reporting or central CKYC on top. So I think whatever we have built so far, every use case has a way to be implemented on blockchain. Depends upon how we will look at which are the first use cases. But in a bottom line, compared to traditional databases, I think private blockchain will supersede over a period of time. Major difference between CBDC, so-called e-rupee in India, and UPI is that UPI is a payment method, and e-rupee CBDC is a complete infrastructure, like how the money will be minted on digital currency methods, and how it will be moved from Reserve Bank of India to the banks, and to ultimately the peer-to-peer for peer-to-peer payments in those wallets. CBDC is a digital infrastructure for managing currency. More than 130 plus countries are working on it. UPI within India, it is one of the payment method riding on an existing method of paper currency, which is being printed at RBI's institute and is moved from a central bank to the treasury of a respective bank. So it is very operational pro. It takes a lot of its time. And imagine the way we have a cash, which is a complementary to CBDC. Managing cash or printing cash is not so cost effective. And when we look at CBDC, we look at the future of finance with the CBDC. The transaction done today by persons, tomorrow it will be done by machines. So when we are in the era of intelligent or autonomous banking, we need similar kind of a fast, safe, secure currency. So CBDC is ultimate answer for that.
Ninth Annual Edition of India FinTech Forums IFTA 2024.